morning and welcome. Patriot Radio News Hour, Joe and Jason on this Wednesday. I hope it finds you well out there as, the year of chaos just continues. We're hearing from DOGE, yes, the Department of Government Efficiency. I think this is going to be a lot of fun. I don't know that they're actually going to, how effective they're going to be. But I think it's going to be fun in how many ridiculous things the government spends our money on. People need to figure it out. We need two things to happen. Number one, we've got to shrink government, and not by a little. By amounts that most people would say is impossible. It's not impossible. Matter of fact, it's actually, not only is it very possible, it wouldn't take a whole lot to get it done. The people just need to accept that, hey, guess what? Taking something from the government just doesn't work. You know, we say it all the time. You don't get prosperity through a printing press. I wish you did. Because if you did, let's face it, if you could get prosperity from the printing press, why wouldn't they just hand out money to everybody? That's just prosperous. Here, everybody, here's thousands of dollars every day. We'll give you $500 a day, $1,000 a day, $10,000 a day. It doesn't work that way. You guys know that. Smarten up. Of course, the other thing we got to do is get rid of the Federal Reserve. We're not going to be able to do it in one swoop, if you will. But at least for this little exercise, it will make for good headlines. And today, we got more examples of ridiculous government spending. The problem is these amounts, I hate to say they're insignificant, but they're kind of insignificant in the fact that on a regular day, we go into debt $3 to $4 billion on a regular day. And then if you got to make, like, Social Security payments, Medicare payments, any of these other big payments, then you can go into debt, a couple $100 billion in a single day. But nonetheless, how about $100,000 to determine whether gin or tequila made a sunfish more aggressive? Now, there's two things wrong with this. First of all, why are we wasting good liquor, right? Why are we wasting alcohol on a sunfish? But yes, to determine, hey, are you more, aggressive when you drink tequila or when you drink gin? Is that supposed to correlate to humans? I don't know. Right? Put it this way. Most people I know, when they drink too much gin or too much tequila, not only do a lot of them end up getting aggressive, they end up usually passing out, throwing up, making a scene, right? I don't think we need to waste $100,000 on seeing whether a sunfish is more aggressive, whether it's drinking gin or tequila. $1 million to study whether cocaine makes Japanese quail more sexually promiscuous. Yes? You can't make this stuff up, right? Hey, I don't know the difference between a Japanese quail and a regular quail, but let's spend $1 million giving these quail cocaine. Now, where does this cocaine come from? Is this cocaine that we seized, like, from drug shipments, or are we out there, like, buying cocaine on the black market, or worse yet, are we making some cocaine in a government lab? I don't know. But yeah, $1 million. How about a video that highlights how the government spent $750,000? This is one of my favorites, because this is one that Jason will because Jason doesn't think we landed on the moon. So I just want to throw that out there. $750,000 to determine if Neil Armstrong said one small step for man or one small step for a man. So one small step for man or one small step for a man. Yes, and guess what? We spent $750,000. Guess what the answer was? Inconclusive, Jason. They couldn't figure it out. They don't know what he said.
Well, maybe they recorded both versions and didn't know which one to use when they faked it. Yeah, it's funny. My wife showed me a conspiracy of the Neil Armstrong and Buzz Aldrin, the original three, that they are the same three men that escaped Alcatraz. That those are the same guys. That the fake moon landing was using the Alcatraz escapees as their, and you see the facial recognition of the three men. They're exact matches.
That's so funny. I remember watching Escape from, it was Clint Eastwood was in it, right? Escape from Alcatraz. I remember that movie. Yeah,
the Birdman. The Birdman from Alcatraz. He didn't get to go, right, but the other guys got to go. Yeah,
that's right. Yes. He couldn't get out in time. Oh man, yeah. There you have it. So, and again, right? Ridiculous. I guess you know what? Forget. I don't guess. There's no excuse to spend any of that money for that. None. It's even worse when you're running trillions of dollars in deficits to hear about this stuff. But again, like I said, if nothing else, the Doge guys, they're going to give us some great commentary, some great satire. Here's the problem. This is true. We actually did it. Yeah. I know. Get the tequila and the cocaine out, and we'll have the government pay for it. We'll be back. 800-951-0592, Patriot Radio News Hour. Joe and Jason here on this Wednesday. By the way, another warning. Get ready. Get your dialing fingers ready. Got another great opportunity once again coming today. And matter of fact, I think one tomorrow too. So got a lot of exciting things happening. But first, let's take a quick look at the markets. The Dow's down just under 100 points. The S&P's down 38. The NASDAQ is down 156. The 10-year note, 441. So yesterday, we had called ourselves a flight to safety with the escalation in Ukraine. Today they launched some British missiles, spread it around a little bit. But bond yields rising today. Oil's up today. Gold continuing to climb. Up $16 right now, 26.48, and gold, another big hurdle climbed here, up about $110 off the low pretty quickly. Silver still hanging in there above $31, and we continue to talk about being diversified, managing your risk here. Managing the risk. Now, there's, I guess, one scenario that I see that you could have Wall Street keep rallying. You could. There is that scenario. It's an inflation scenario with a lot of government spending and a lot of money printing, tariffs, getting a hold of the border, right? These things will drive up cost. But the economy hangs in there. Yields keep going higher, and Wall Street will rally. That's about the only scenario. All the others, we have inflation with higher yields that stymies Wall Street. You'll just get too high and take it out. We end up with the hard landing that everyone talks about, which is just overwhelming amounts of debt. The economy kind of just can't get out of its own way anymore. No matter what Trump does, it's just kind of, fighting to stay in place. World War III right? You got to put that out there, right? Trade wars, all these things. The vast majority of the risk out there is to the downside. That's just how it is. And we keep talking about the need for you to be more prepared, be more diversified. Especially, one of the listeners texted in, and I really liked what he said. For those of you, and I get it, you like to have a lot of money in your bank account. Why? It just makes you feel good. Because every month when you get a bank statement, I don't even know if you even open it, right? I don't even know if they mail bank statements anymore. But anytime you look at your balance, you see the number. Like, gosh, I see 200,000, and it makes me feel good. Well, imagine if you had 200,000 in your bank account 20 years ago, and what you could have bought with that 200,000. Right? 20 years ago, you bought 200,000, got you at least the entry level home, and probably a little above entry level, right? Today, that doesn't even get you half of an entry level home. Forget about gold. I mean, 20 years ago, you could buy a $20 gold piece for like $330. Now it's almost $3,000. But you like it. But do you know what you're really saying by having that kind of money in your bank account? You're long the dollar. That's really what you are. You're sitting there thinking that somehow, I guess, I don't know, where inflation's going to go away. That dollar devaluation isn't going to happen. I mean, the Fed, they literally tell you their goal. And how do we decide that that was the goal? They decided it was the goal. We didn't even get a say. Hey, we want that $200,000 to buy 2% less every year. Do you know that 20 years later that you would have lost 40% of your buying power if they were right at 2%, which they aren't? Imagine what we just been through. Let's just say we went 20 years, I don't know, at 5%. The devastation that would happen to that $200,000. It's a fool's game. Why? What do they want you to do with it? Well, they want you to go into the stock market. That's what they'd like you to do. Right? Risk it. And we keep telling you. Listen, I wish it wasn't. Listen, if we had gone from $2 trillion in debt to $1 trillion in debt over the last 2 years, then maybe I'd be like, oh, hey, man, we're getting a handle on this. We're not. It's the other way. Remember what I said about Lowe's? Lowe's is like, yeah, well, sales are going to be down about 4%, yet our stock's up 22%. We didn't even talk about Target yet. You need to be so much more diversified, because here's the one thing we know about boom and bust. And again, we didn't pick it. That's what they gave us. Every bust cycle is worse than the previous one. That's just the pattern. I don't want it to be, but that's just what it is. And it's going to happen again. For those of you that got the big IRAs, what are you doing? You need to take a big chunk of that. You need to put it into a gold and silver IRA. You can do it without any penalties. Just some paperwork. Doesn't cost anything. You pay a whole lot less in fees. Let me tell you, a gold and silver IRA, honestly, it costs you not even probably $200 a year. That's it. Right? The Wall Street guys, what are they hitting you at? Well, we want 1% of your total amount every single year. We want 2% of your total amount every single, and you got to pay them every single year. That's crazy. Don't do that. And then you got to take a chunk of it, at least $50,000, because they have $50,000 or more, and call our friends at Y Refi. Get 10.25% fixed rate of return. You can use it to supplement your Social Security checks. And I know, boy, ask anybody who has to just live on their Social Security check. Ask them. They'll tell you. Especially if they've been fortunate enough, I don't know, fortunate may be the wrong word. If they were on Social Security 20 years ago, and they're on it today, ask them, hey, are you better off? They'll tell you. They'll be like, hell no. I was barely getting by 20 years ago, and now I don't know, you know what? I'm dependent on my kids, my grandkids, whatever it may be, the state. Check them out, investYrefi.com. That's the word invest, the letter Y, REFY.com. Or just call them at 888-YREFI24, 888-973-3924. And Jason, before we get to the special, by the way, we're going to run the special at the next segment, so get ready. Just be ready. It's another huge opportunity. I'll give you the number again. Write it down if you're new and you're like, man, I want to get in on this market, and you want to pay a lot less. You're going to get that opportunity here in a minute. 800-951-0592. So we got great news out of Walmart yesterday. Right, Walmart said, man, sales are good. Of course, they went on to say, this is how much they know about us. Do you know that Walmart knows how much money you make? They do. If you paid with your debit card or your credit card or a check, they know. You're at a store, even if you pay cash, but you put your little number in and you get your little discounts and you didn't lie on the application, they know. You know what Walmart said? Man, rich people are shopping at Walmart. That's what they said. People making over $100,000 are pouring in. Why? Because $100,000 isn't rich anymore. Today, Target, big miss. Big miss on Target. Target said something very interesting. Hey, we've got more people coming in, but they're spending less and less and less. And saying essentially they're only buying something if it's on sale. Target had to lower their forecast, saying that fourth quarter comparable sales will be flat to down. All of the numbers inside were not good. Same-store sales were down, kind of like Lowe's. Their EPS missed, their gross margins missed. The average transaction, listen to this, the average transaction size was down 2%. On top of that, their EBITDA numbers down 5.5% year over year. Their operating margin missed by a full percentage point. And, of course, the comparable same-store sales down 1.9%, so just under 2%. And Jason, this, again, one of these times, and this is what we've seen, too, before, right? When we look at, okay, Home Depot, Lowe's. Home Depot, obviously bigger, maybe a little better operator. Lowe's is bad first. When we look at Target and Walmart, same thing, right? Walmart usually will hang in there. It'll be Target that will tell you that things are getting worse. We got both of those this week. Kind of, is it a trend yet? We'll see. But, Jason, this was, it was one thing when it was Big Lots. It was one thing when it was some of these other off-brands, Advanced Auto Parts and, some of these other places, TGI Fridays, and that's one thing. But now it's starting to creep into some of these bigger retailers like Lowe's and Target. It's going to be interesting to see what is going to happen this holiday season with the consumer.
Yeah, we'll see if they add a little bit more, right? Do they have a little bit more spending power before it's all over? I said this a couple of months ago, Joe, where I think a lot of the big retail outfits are going to try to get as slender on inventory as possible, because I don't think there's a lot of big name corporations. I think there's going to be a whole lot of spending next year at all. So you don't want to be caught with a whole lot of inventory, right, Joe? I mean, I remember all the ships sitting in the harbor and they didn't have anywhere to put all the stuff, right? Remember, Joe?
Right.
Just after COVID, you don't want to be taxed on a bunch of stuff sitting in a warehouse if you don't have to be. Anybody who owns a business knows you're holding a whole bunch of inventory at the end of the year. You get taxed on all that. So I think the prices will, I could just see now the Fed just talking about how, if inflation is down, because the prices on all this stuff is going to be slashed. I can't imagine the sales. If you're a big Christmas shopper, this should be a pretty good year for you, Joe, because I think there's going to be a lot of low prices, and I think that'll probably, I don't know if it'll be the record shopping season, but they're clear it out, because next year is looking worse than this year.
Yeah, get ready. Get those dial-in fingers ready. A huge special coming up next. Patriot Radio News Hour. We'll be right back. 800-951-0592. Really quickly now, gold's up 18 here, 26.50 as it continues to surge. The Dow doubling its losses, now approaching 200 points, and the 10-year note just went all the way down to 439. So I don't know if there's going to be I'm assuming this has something to do with war. Just making that assumption here that maybe Russia is getting ready to launch some form of response. I don't know. It's just a pretty quick move in the matter of about 60 seconds here, so we'll keep our eyes peeled for that. But the special today, you're going to get a $20 gold piece and a 1-ounce silver bar. But it's about price. The $20 gold piece in this package, and by the way, we have 37. We don't have 38. We don't have 58. We've got 37 packages. The $20 gold piece in this package, $2,745. That's $95 over spot, which is like, Jason, we're talking like 3%. 3% over spot on a $20 gold piece in this package. Incredible. The silver bar. We got silver at $31. It's $30 in this package. So $1 under spot on silver. So you get both items, a $20 gold piece, a 1-ounce silver bar for $2,775 at 800-951-0592. And Jason, this is a huge opportunity. I mean, when you think about it, gosh, what, like 3 weeks ago, gold was $27.45 3 weeks ago. And it's going to be $27.45 again. Maybe today, if Russia does something we hope they don't do. I hope they don't. I don't think they will. But already, news out of India, this just broke as well. Remember, they've been telling everyone, prices getting expensive, demand's going to go away. Well, somebody forgot to tell China and India. They said that gold sales skyrocketed, fired on all cylinders in October. Apparently that's a big holiday season in India. They said price didn't matter, Jason. They can't get enough of it. They're buying coins. They're buying bars. They're buying the ETFs. They're buying jewelry. The Indian people, they figured it out. that this is gold on sale right now, plain and simple.
Yeah, and we've been talking ever since COVID and the money printing and the inflation. We just said, look, it's just going to get more expensive. The inflation's not going anywhere, and what's really going to be traumatic to the world economy and good for gold is if the spending that it looks like is going to have to happen in America next year happens to pay for all this stuff that's going on, Joe. Gold and silver is going to have another year like this. I don't know if it's going to keep going up the way it did this year, the rest of this year and next year. I see gold doing what it normally does, kind of trekking upwards a little bit at a time. But then you watch sometime, I would say early, mid next year, I think you see another big surge in gold. And another 500, 600, 700, 1,000. And that'll go into 2026. So this is going to be the new good old days. Yeah, through the years I say the good old days, right, Joe? We may be settling. We may be settling for a short time in this kind of range of 2,500 to 2,900 gold or wherever it is. It could just go up, but we could be settled in a range for a short time, and then early next year, March, April, May, June, we could see it take off again. And you're going to say, right here, silver below spot. I don't think we'll be saying that next year when all the buyers come out of the woodworks to jump in, Joe.
Yeah, and think about this: $20 gold piece, $95 above spot when spot's $2,650. The fact that Goldman Sachs today out with another note, they still expect this is. You know what? And why not? Lynette Zhang saying the same thing. They still expect gold to hit 3,000 this year. This is what they're saying. They're saying, hey, this is where it's set up to be. Take advantage here. I think, Jason's right. It doesn't matter the outcome. If we have inflation, kind of almost hyperinflation, what's that mean? That means, hey, the stock prices are going up, gold's going up, silver's going up, everything's more expensive. Or if we end up with stagflation, which is what? Well, the stock market's not going up, but everything else is going. Interest rates doing what we're seeing here. There's a few people now saying that is the housing market going to crash? I don't know. We'll have to wait and see. Just depends, I guess, on how high the interest rates go. But, Jason, I'm telling you right now, the opportunity today, I can't stress it enough. If you're sitting there, you've been waiting, been thinking about it, buy this special. Buy this special. I don't be surprised if by Friday, gold's already $2,700. Don't be surprised. Don't be surprised.
Look, I've been saying since COVID that a housing crash won't look like housing prices going down. It'll look like housing prices going sideways, or maybe even going up 3, 4, 5%. If you have a $500,000 house at the beginning of 2024, and at the end of 2024, it's worth $505,000. You got 1%, and is that your house going up in price? When gold goes up 25% in the same year? And the price of food, groceries, everything else, rent is going up way beyond that. So, Joe, I know you got the guys on the internet saying, on the YouTube channel say, well, house price crashed 50%, and just the cost to build the house means that you can't really have a 50% housing price crash. Maybe in some markets in some bad place, but to build the house, whatever the base cost to build the house, that's about the bottom. That's about the bottom, and it's usually going to be more than that because there's a market. There's still a market no matter how bad it is. So I see housing prices going sideways over the next stretch, and then all asset prices going up means that your house price is crashing. So it's just inflation. I've said how many times, Joe, that inflation kind of just blurs normal economic activity that we're used to over the last 40 years. We haven't had 70s inflation until just recently, right?
Absolutely. The huge, and I can't underestimate that, say that's enough. The huge special today, a $20 gold piece, a 1 ounce silver bar, and it's only $2,775 at 800-951-0592. Jason and I, we're going to be right back. 800-951-0592. This one, a gold and silver spectacular sale. $20 gold piece, $2,745. You know, when you got gold sitting here right at $2,650. Right, so you're paying a whopping $95 over spot. And then a 1 ounce silver bar. You got silver just over $31. You're going to buy that silver bar at $30. So $2,775 gets you both coins. If you've never bought gold and silver before, and I know a lot of people, they're scared, they're intimidated, nobody, they don't want to be ripped off. Here you go. How do you know you're not getting ripped off? Well, the silver's below spot, right? The gold, you're only paying a $95 premium. That's nobody lives on a 3% mark. Not even Target can live on 3%, right? But here we are. And I know a lot of people are just, well, gosh, I don't know, and I'm scared, and then if I call, you're gonna trick me or make me buy things I don't want or all this other crap. You're gonna call me all the time and harass me. No. We are the exact opposite. Number one, we value privacy above all else. When you come into one of our locations, you're not in there with the tweaker who stole grandma's jewelry. You're not in there with all of these other people watching you. We do everything by appointment. If you want, you can set an appointment. We'll walk you through. We'll bring product out for you, show you it, talk to you about it. Then what happens? Nothing. Nothing. You buy or you don't. The best way to buy today is call the 800 number and just tell the girls, I'd like the special. Can I have the special, please? And you know what they're going to ask you? How many would you like? And you just tell them, I want 1. I want 5. I want 10, however many you want. You can pay for it via check. If you want to use a credit card, we take them all. Visa, MasterCard, Amex, Discover. We charge 2%. Which is less than anybody else out there. It's an extra 2% to use a credit card. You can send a bank wire. If you want to come in and pay cash, you can do that as well. When you call in order, we give you a trade number. So let's just say you called up right now and said, okay, I'd like 5 of those specials today. So you're going to get 5 $20 gold pieces, 5 1 ounce silver bars. The total's $13,875. If we ship to you, maybe you're out of state, maybe you live real far away, too far, you'd rather not drive. I get that. We ship FedEx, and it's a flat $35. It's a flat $35. That's it. That's all it costs. We give you a trade number. That trade number locks you in. Gold right now is up $18. If you had bought gold yesterday and you got your trade number, guess what? Gold went up $18. Doesn't mean nothing to you. Once you get that trade number, the price is locked. If gold goes up another $50 tomorrow, which I think it may, you don't pay anymore. Now, conversely, let's face it, if it goes down $50, you don't get to pay any less. Well, I know, the old-fashioned, we will honor our word, you honor your word. Like I said, if you want to save the $35, you can make an appointment. Do you have to run down to our office today? No. Set an appointment that works best for you and for us. You may come in next Tuesday, right? Next Friday. We don't care. What happens after that? What happens after I get my product I paid? You're going to call me. You're going to harass me. You're going to send me stuff in the mail. You're going to blow up my inbox. Nope. We don't call our customers. We don't email our customers. We don't, well, I don't want to say we don't. I've sent out one mailer. One. And that was like, I don't know, 8 or 9 years ago, and I don't plan on ever doing it again. How's that? We just don't do it. We don't sell your name. We don't sell our list. The next time we hear from you will be when you call us. I know it doesn't make sense. That's not the way everybody else does it. That's the way we do it here. 800-951-0592. We just got a third line open. Get them. Well, we have them. We had 37 when we started. It's a $20 gold piece. Right? The best gold, though. Why do we like the older gold the best? It's just more private. You can buy it, sell it, trade it. You don't have to worry about 1099s and Social Security numbers and blah, blah, blah. And, of course, it is a collectible. If we do need to go to some form of gold-backed system in the future, which is being talked about, remember the last time our government confiscated gold from the citizenry? 1933. What was the one gold you got to keep? Oh, yeah. What was that collectible stuff? I don't know. Seems worth it to me. 800-951-0592. Final segment coming up. We'll be right back after the break. 951-0592. Patriot Radio News Hour. Joe and Jason wrapping up this Wednesday. The big sale today, a $20 gold piece. Right now, $95 over spot. And, Jason, it kind of looks like it wants to be even less than that here. Gold right now, $2,650, 20 cents and rising here. And I wouldn't be surprised, like I said, who knows, by the end it could be $70 over spot. That's how great of a deal you've got going on. We're throwing a 1 ounce silver bar in with it at $30. Right now, silver, $31.05. $31.05, so $1.05 under spot for the bar. To get both items, $2,775. The interesting thing, I guess, today, Target, we had bad housing numbers, mortgages really flat today. Boeing laying off 2,200 people in Washington. That is going to be, I guess, their last days right before Christmas. And we're sitting there and we're in this situation where everybody, again, is back to another rate cut coming in December. Remember, we'll get one more inflation report. We'll get one more jobs number. We'll see how those things look. But, Jason, it's something where I think we're over kind of the Trump euphoria now. Now everybody's kind of back looking at fundamentals here. What do we have? What are we going to be looking at? How big are the deficits going to be? How much money can the Trump administration actually cut? I think that's going to be the other big thing. I know I heard a report yesterday that they're talking maybe about something with Social Security. As I've told you guys, if they're going to do anything meaningful in cuts, Social Security, Medicare, Medicaid, and defense have to be on the table. If they're not on the table, we're not cutting anything. But we'll have to see if that happens. That would be wildly unpopular. So I don't see it. I don't see that happening. Instead, I see one of two things. We're either going to run into kind of more of this hyperinflation where we see inflation come back. Do we get to the levels that we saw under Biden? I hope not. But the one thing I'm certain of, we're going to have much higher gold prices, much higher silver prices, and unfortunately, Jason, much, much higher bond yields.
Yeah, gold will just keep going up. This is not 2011 or 1980 gold and silver prices where they got a little overbought. That monkey business with the Fed that was happening in 2011 is not happening right now. They're printing and spending. They're not printing it and just bouncing and saving the banks this time. So gold is not overbought at this price. The pullback we had is a natural part of the cycle, and I expect gold to keep trailing upwards. And maybe another spike next year like we had this year. I mean, from March to October of this year, man, that gold just ran, right, Joe? $800 an ounce. I mean, it's I think we're gonna start seeing those regularly as in the years to come.
Right now, I'm sticking to my forecast: $3,300 gold next year. We're gonna see. I'm telling you, we're going to have $40 silver, but in my heart, I believe it's going to be $50 silver. So, great opportunity today. Again, a $20 gold piece and a 1 ounce silver bar, all of it for just $2,775. 800-951-0592. Jason and I